Hey everyone, how are you? I'm sure this has happened to you because it's happened to me a million times. I'm sure there's been times when you've looked at a stock and you've wanted to buy it, and for whatever reason, either you weren't paying attention or the stock ran away from you, or for whatever reason, it just didn't happen. So a stock runs away and there's absolutely no opportunity for you to buy it, and it just kind of falls off your radar. So in this video, I'm going to show you how to use the option market in order to get paid while you wait for the stock that you want to own in the first place. So my name is John Napolitano, and in this video, I'm going to show you some option strategies in order to make that happen. I am the head instructor here at Stock Trading Pro for options trading. And if you're interested in these types of videos, please like and subscribe this channel. We will keep making them the more and more people that are interested. But you know what? For this, I'm going to jump right into it because this is an important thing. We're going to cover something called cash secured puts. It is a great way to get paid while you wait, especially for those who have retirement accounts. You can do this in an IRA, as well as an account that is mostly on the investing side. There are other strategies you can do, which we'll cover in later videos, that allow you to have a smaller account. But for this is basically for people who have kind of missed the boat, who wanted to buy shares in something and just was not able to. So let's jump into it right now. I'm going to show you exactly what I am talking about. And I chose Tesla as an example because, as you can see, for several months, especially over the summertime, it was range bound for quite some time. Maybe you had your eye on it. Maybe you went away on summer vacation. I'm sure there's plenty of scenarios that you could think about where, hey, I should have bought that stock, at 300 and now it's at $464. Well, guess what? Tesla does, especially Tesla, you can see it tends to have quite a wild ride. If I go all the way back in time, it tends to pop, it tends to drop, then go up again. So it's a bit of a roller coaster. And cash secured puts is a great way to get involved in a stock like this and collect income in the process. And I mean pretty serious income. We're going to show you exactly what I'm talking about on the option chain in a second. But right now you can see it's trading at $464.72. That's where it closed yesterday. It had earnings a few days back, and it's been kind of off to the races ever since. It looks like it even maybe wants to break out higher. So you might have asked yourself, well, hey, I missed it. I'm just going to move on to something else. Well, in the options world, you don't need to worry about that necessarily. You can go ahead and do something called a cash secured put. Some of you might be familiar with cash secured puts. I know a lot of investors use them, but I think they're very misused. It's probably one of the most misused instruments or strategies that you can use in the option market for many different reasons. The main reason I would say that people kind of suffer from these is they oversize. Remember, one contract gives you the obligation to receive 100 shares. So that's about a $46,000 commitment. If you don't have that kind of money in your account, you shouldn't be doing a trade like this. But there are other stocks, there are other names that are cheaper than $474 that you can look at. So this is just an example, but there are other strategies you can do. For this particular example, though, I'm going to show you how much money you can collect properly with a cash secured put. So let's say if you look here, the 50-day moving average, let me go back to my screen here. You can see here that the 50-day moving average is at around $420, and that might be an area that you might be interested in, where you think you might see a pullback, and basically, that might be an area you might be interested in accumulating shares or even beginning a position. So if you do this in the real world, you might have to place a limit order and kind of let it sit there and wait for a really, really long time. And of course, you may never get filled. It may never pull back to 420, or it might take a really, really long time. And you're basically, your capital is basically just sitting there doing nothing in the meantime. And when it comes to trading or investing, money that's just sitting there not being used is money wasted. That's a very important concept. It is great to have cash positions during times of uncertainty, but you should always be trying to get paid while you wait. And that's what's great about cash secured puts. You get paid to leave a limit order is essentially what you're doing. I'm going to say that one more time because it's really, really important. You're getting paid to leave a limit order. That's essentially what a cash secured put allows you to do. This is an option chain for those who are maybe unfamiliar with options. It allows you to select the strike price and the expiration date that's appropriate for this strategy. Now, there's lots of reasons why I would pick a certain expiration date or a certain strike price in this particular case. I just showed you a support level that I was interested in, which happens to be $420. So in this case, the strike selection is fairly simple. It's an area where I'm comfortable owning 100 shares of Tesla at $420. A lot of traders, they'll look at the Greeks like Delta and stuff like that to determine what levels they should consider a cash secured put. Personally, I have rules for this, and I talk about this in my classes and in my coaching. If you're interested in coaching, by the way, if you're interested in learning more about what we do at Stock Trading Pro, please check out our website below in the link, as well as a link to some of the products that we offer. We offer coaching. We offer a newsletter with idea generation every single week, as well as an introductory course that talks about basically option strategies that work 80-90% of the time. So please check that in the link. But in the meantime, I'm going to show you $420 is where I'm picking. And that's about a 25 delta, which to me is acceptable. I generally go 25 or lower. It really depends on how desperate you are to own the shares. You could do a higher delta if you're comfortable owning shares at a higher price. If you're not, and you want to use that as support, the particular price that I selected, $420, your delta is about 25. Now, what does that mean? That means you got about a 75% probability of this option expiring worthless and you not receiving the 100 shares. But that's okay, because here's the magic trick to this. You get to repeat this process every single month until you do get assigned the shares. So for $420, you're essentially receiving, if you look, it might be a little bit hard for you guys to see, but I'll lay this out for you. The bid offer is currently $12.40 by $12.60. That means that you're going to receive, you ready for this? $1,250 in income for just 1 month while you're waiting for those Tesla shares to come in. Think about that. You're waiting for 100 shares to come in. If it gets to 420, you're still going to collect that beautiful premium of $1,250, and then you're going to own your Tesla shares at $420. Obviously, the risk is it could keep going lower. That is the risk of owning any shares, really. So the key to this, and the key to proper cash secured put trading, is to be comfortable owning the shares that obviously you're committing yourself to. That's a big mistake new traders make. They get very premium happy when they see $1,250 and all these nice juicy premiums, and that could get you in trouble. So the implied volatility on this is fairly high. It's at around, it's at around 60%. So, Tesla tends to be a little bit wild. So, it's very headline driven. So you do get a nice juicy premium for while you wait. But what does that mean? It also gives you a little margin of safety for the stock itself. And what do I mean by that? Well, think about this for a second. Let's do a little bit of math real quick. I'll use the calculator so you guys can see. If you get assigned at 420, if Tesla was to, let's say, get to this area that you, that you think it might get to, that you're comfortable owning the shares, 420 is a pretty good price. But think about this. You took in $1,250 in premium, right? So the price that you're paying, your cost basis is only $407.25. Think about that. So you have a margin of safety here that you don't get when you buy regular stock. So if you left a limit order at 420 and got hit and the stock went down to 407, which is down here, you're going to be losing money. In the options universe, your margin of safety is 407. So that basically means because you collected $1,250, you could subtract that from your cost basis, and your overall P&L will be even better. So this is what I mean by cash secured puts. I don't accumulate shares any other way, because there's no reason to leave a limit order once you figured out how to properly use cash secured puts. I hope this little lesson was helpful. For those of you who are unfamiliar with this, obviously practice before you go out there with real money. There's plenty of ways to paper trade. definitely check out our website. Definitely check out some of the stuff that we offer downstairs in our description page here, and like and subscribe to this channel. We have plenty of free education for you guys, but obviously coaching and real education is the key to success. So I hope you enjoyed this video. If there's any questions, feel free to put them in the comments. I'll be there watching, and I hope you guys have a great rest of your day. Take care, everybody.